The overall conclusion for the Swedish economy is that GDP growth and inflation will fall this year and next. Henrik Unell, Nordea Bank. Okay, well, there was plenty of data released this morning concerning Sweden's economy, with business and consumer confidence reports, as well as the nation's latest unemployment rate figures. Though, what is your assessment of the data we've seen today?
Well, the numbers were quite poor, and the market reaction if you take the Eurosec, for example, was clearly a disappointment. And then Eurosec went up 4 figures. And the Eurosec has been in a downward trend since the beginning of this month, and that trend could really be broken, unfortunately, because of these numbers. But just to comment on them, I mean, world trade has somewhat stagnated, and frankly, indicators do not suggest an improvement anytime soon. And the confidence indicator for the total Swedish economy, the ESI, fell to its lowest level since October 2013. Indicating that our GDP growth is slowing markedly, and especially the manufacturing sector is experiencing a decline. And the ECI indicator is, I would say, consistent with modest GDP growth around 2.5%. But what is also worrying in this morning's statistics is that the consumer confidence broke its range on the downside that it's been in for the past 3 years. But the unemployment numbers, they rose again in July after surprisingly low readings in June, but it's still in line within the Riksbank's forecast, and the numbers are wobbly during the summer because of students looking for jobs and such. So I would say that one was a no biggie. But the overall conclusion to the Swedish economy is that we've been arguing that for quite a while, that GDP growth and inflation will gradually fall this year and the next.
Okay, well, on that point, the last time we spoke, you mentioned that strong growth in Sweden without higher inflation is not a force that impacts your monetary policy. To what extent, then, does the unexpectedly high inflation data in July give the Riksbank a breather? Well,
you're quite correct there, Sam. The Riksbank couldn't care less for strong activity data if it's not accompanied by increased price pressures. Following the surprisingly low inflation outcome in June, inflation turned out higher than expected in July, like you said, at 1.4%. I wouldn't say that we have a level of inflation where the Riksbank really can take a breather, though. You know, the Riksbank are convinced that inflation will continue to rise, but at the same time, they also say or communicate a maximum contingency to act should they deem that necessary. And if you look at our inflation forecast, it is significantly lower than the Riksbank's next year, not this year, though. So in terms of monetary policy, if you translate, the downside should still be in place, or should still be in play, a bias for more stimulus rather than less if you look forward, especially into 2017.
Right, and before we get to 2017, which indicators will you be keeping an eye on in the near term that are likely to have a significant impact on Sweden's economy?
Well, tomorrow will be interesting. Of course, the Fed in the short term and Yellen's speech at Jackson Hole will be of interest because of, well, depressed rate expectations in the U.S. and that she might try to alter them, and of course that will affect the level of the dollar. But of course, if you look further out into the autumn, the U.S. elections is quite interesting. And domestically, I would say house prices in Sweden. There seemed to be a cooling of house prices, which is well within our forecast. But like I've said before in Dukascopy, because of our lofty elevations, the dynamic of house prices going forward is really hard to predict, and it could mean the difference between a growth slowdown in the future and something very more severe in terms of growth.
Thank you, Henrik. Be sure to check back with Dukascopy TV for more updates throughout the week. I'm Sam Meredith, and we'll see you next time.